HMRC is going on the attack in 2026 like never before. And it's not the big corporations that need to worry here. It's the everyday person who's in their crosshairs. You are now more likely than ever to have a tax investigation, to receive a HMRC letter, to have them looking into your affairs. Now, over last year, we've uncovered something that's pretty worrying, to be honest. We are a data-driven accountancy firm. We track everything, all right? And so we analyze patterns, we monitor trends. And what we've seen in 2025 is absolutely unprecedented. 10 times. That's how much our HMRC-related caseload has increased compared to prior years. Now, that's 10 times more audits, 10 times more letters, 10 times more clients coming to us needing help with HMRC inquiries. And these demands are across the board. It could relate to undeclared income. You've got capital gains, crypto gains, dividend discrepancies. Now, there are so many different triggers that, honestly, you shouldn't be surprised if you even get multiple letters. I myself have had a couple. I've got nothing to declare, but they're flagging things from years ago just to check. And here's the thing. Historically, a lot of these letters, they were fishing expeditions, right? HMRC has had limited data historically. So they send out these mass letters hoping someone would panic and pay up. It's easy to ignore those, but not now. Because their new powers and the technology available to them, they now have a much bigger picture of your finances. When they send a letter now, it's not random. They have data. They're opening an audit. They want you to explain yourself. And where this gets really frustrating, when HMRC calculates what they think that you owe, they take the gross figure. That's no allowances, that's no expenses, that's no costs. That's the biggest number that they can justify. Then they add, of course, their penalties on top, and they go for maximum. So someone who might genuinely just owe £10 in tax could end up facing a bill of closer to £1,000 when you include fines and interest. Now, we saw this coming early this year. We released our first pretty much video warning people about this. Your HMRC letter is coming, how you should respond to it. We had an unprecedented number of people reaching out to us, and we knew this was only the beginning. And now HMRC has raised so much money targeting the likes of you that in the recent budget, they've committed to upping the ante even more. Now, let's talk about the money, because this pretty much tells you everything you need to know about their priorities. You've got 410 million in 2026 to 2027 and 490 million in 2027 to 28. That's additional spending on top of what they're already spending on compliance and enforcement. That's £500 million going into making sure they squeeze every last penny out of the taxpayer. Now, let me break down where some of this is going. We've got 64 million for private debt collection agencies. They're literally paying third-party companies to chase you down for tax debt. There's 89 million for additional HMRC debt staff. That's more people whose entire job is to put you under pressure and investigate your tax affairs. Then there's 59 million for investment in technology. These are digital prompts, real-time monitoring, systems that track what you're doing as you're doing it. They're building an infrastructure to watch everything. And this isn't about fairness, of course it isn't. This isn't about catching wealthy tax dodgers that might have complex offshore structures. This is just about volume. It's getting as much money as possible from as many people as possible and the easiest targets. Small businesses, side hustlers, freelancers, consultants, anyone with income outside of your PAYE payslip, essentially. So now that's the money, but let's talk about what they're actually building with it. 350 new criminal investigators specifically targeting small businesses. 50 additional service staff that are going to focus on insolvency. That's directors who might be trying to avoid tax. And then there's the Hidden Economy Task Force. Now, this is a new cross-government unit going after cash-heavy businesses, barbers, car washes, vape shops, mini-marts. Now, honestly, there are probably a lot of people who'd back this. There's always been suspicion around certain cash businesses. That's fair enough. But what kind of really worries me with this is when you combine more investigations with more staff, with more technology, and the targets they're going to go after, there's always collateral damage. People who have done nothing wrong get caught up. People who have made honest mistakes get treated like criminals. And that net gets wider and it catches everyone. Now let's talk about penalties, because this is where HMRC really makes the money. Corporation tax late filing penalties doubled from 2026. We've got self-assessment penalties increased from 2027. We have VAT late penalties also that are going to be increased. And this is how they make money, even if you're mostly compliant. You file a day late, that's not a small fine anymore. You miss a VAT deadline, the penalties just got bigger. Now remember what I said earlier, someone, could owe £10 in actual tax, facing that £1,000 in fines and interest. Going forward, that could be doubled. Now you don't need to owe a lot of tax, you just need to miss a deadline or fail to declare something. And there you go, that's a fine. That's where the revenue is really coming from HMRC here. Now they've also got the rewards program, and this is something that's really kind of caught my attention because they introduced this rewards program for informants. Now this is people for ultimately they're going to report on you, and they can get 30% of tax recovered on larger cases. Now don't get me wrong, this is for large cases, but just think about that. They're incentivizing people to report on each other. Go out there, do our job for us, and we'll pay you for it. And this is live now. That was effective immediately after the budget. And then there's the new recklessness offence. And this is huge. Right now, to prosecute someone criminally for tax evasion, HMRC need to prove it was deliberate. That's one of the hardest things to prove. They have to show that you intentionally evaded tax. Now, with this new recklessness criminal offence, they just need to prove that you were reckless. And that's a completely different bar. It's much easier to clear. Sure, there are going to be people who should be prosecuted, don't get me wrong. But again, it opens the door for someone who has just been careless, maybe didn't know the rules for whatever reason, to potentially face criminal charges. And that is a genuine worry. Now, one of the most worrying parts of all of this, it isn't the staff, it isn't the penalties, it's actually the data, because they're building a surveillance infrastructure. And that means that they know about your income before you've even thought about declaring it. There's now a lot more global sharing between tax jurisdictions. Our own tax body, HMRC, working with banks, working with online platforms, working with crypto exchanges, working with payment processes. And from 2028, they have more frequent access to bank interest data, car payment data directly from processors. They're not waiting for you to declare anymore. They're getting the information themselves. You've got digital prompts that are coming to VAT software from April 27 and corporation tax from April 2028. And that's your accounting software, essentially flagging potential issues to HMRC before you even file. You've got crypto reporting. Crypto service providers now must report UK residents. All information collection starts from January 2026. The first reports into HMRC by 2027. So if you thought crypto was private, it's not. Every transaction, every gain, they know about. And you've got property information as well. There's automatic exchange on data on foreign properties, and that's going to be moving into kind of late 2029. So if you've got a property abroad, they're going to know about it. The picture they're building is comprehensive, and they're comparing it to what you declare. Any gaps, they'll be sure looking for them. Now, let's be clear about one thing here. All this informant, all of these new powers, all of this investment, who's it aimed at? It's certainly not the really rich, is it? It's not people with complex structures or expensive advisors or offshore arrangement. They're not the ones getting caught up in this. They have the team of professionals making sure they're absolutely bulletproof. Who this hits is you, the person with the side hustle, the person selling on eBay, the freelancer, juggling multiple income streams, the consultant, the small business owner trying to stay on top of everything. Ultimately, a sole trader. It could be someone even with crypto, a couple of investments. You're, in reality, the low-hanging fruit. You're the easy catch. You'll panic when that letter arrives. And you'll likely just pay whatever they demand to make it go away. Not in all cases, but in a lot of cases, that's how people do react to it. And that's the calculation they're using. It's all about volume. Get thousands of small businesses and individuals, £500 here, a couple of thousand there. You multiply that out, well, you've got billions in revenue, right? And yeah, the frustrating thing is if you owe tax, you should pay it, there's no doubt about it, but the rules aren't actually published everywhere, in plain sight, being proactively kind of forced down you. So it is easy for anyone to set up an eBay account, to set up a crypto account, to start up a side business, a side hustle, and not realise the implications until you get hit with a letter saying you owe thousands of pounds in fines for something that you didn't even know you needed to declare. And what we should be doing as a country anyway is encouraging people to earn additional income, to test things out, to be entrepreneurial, not scaring them into thinking that these small ventures will result in a fine from HMRC. So what does this all really mean? What's going to happen? Well, first, if you're running any kind of business, any side income, any income outside of employment, you have to assume it's going to get scrutinized more in 2026. There's no doubt about that, really. The second thing is, those brown envelopes that, I've warned you about, I've spoken about before, they're not slowing down, they're ramping up. Penalties, they're going to get worse, doubled by 2026, bigger fines, more interest, not a good picture. You've then got fourth here, they're watching your data, our data, bank accounts, car payments, crypto transactions, online platforms. They're building a complete picture of your financial life. They're comparing it to then what you declare. And then fifth, innocent mistakes are getting harder to claim. This new recklessness offence means they don't need to prove that you deliberately evaded tax, just that you should have known better. That is a much lower bar. The system, in a nutshell, is stacked against you. And from 2026 onwards, it is certainly going to get worse. Talk about what you need to do now, because HMRC are going to be coming after you. They're going to be coming after us. What do you need to actually do about it? Well, step one is get properly compliant. And when I say properly, I mean properly, not just a little bit compliant. If you think you're doing some things wrong, you need to make sure that you're not and you're bulletproof. Every receipt, all transactions, every piece of kind of income, there's no gaps. You understand it. There's no guesswork. Because this level of scrutiny that's coming, you certainly can't afford to be an easy target. Now, number two is that record keeping. You keep immaculate records. Perfect records are digital records, they're backups, bank statements, invoices, receipts, everything. So because statistically, you're going to be more likely now to get a letter than ever, you need to be able to prove everything immediately without scrambling to find documents, without sending them something that they need to know. Not thinking, I think it's somewhere, I don't know where it is. You need to be prepared and always prepare for the worst in these cases. So step number three, focus on keeping more of your money. Because here's the reality, with HMRC and the government trying to come after you more and more to get more and more of your money, you need to protect yourself as much as you legally can. It's better in your pocket, fueling your family, fueling your business, than disappearing into unnecessary fines. If you're not a tax expert, if you don't understand what tax efficiency really means, and you're running any kind of business or side income, get professional help. Tax efficiency, tax strategy, it's not typically a one-person job. I don't know all the rules, which is why we have a team of accountants who specialize in different areas. So when we look at a client situation, it's not one person reviewing the whole picture. You've got multiple people reviewing their multiple and dynamic streams, with the bottom line making their income as tax efficient as possible. Now, step number four, don't panic when the letter arrives. The key thing is read it carefully, understand what they're actually asking for, and certainly don't just pay up immediately or just do a data dump of everything without going through and making sure you know exactly what you're submitting. Don't ignore it. Don't miss the deadline. Respond strategically. And if you do need to get advice, then just get it. Because typically HMRC are half wrong. They're making always some assumptions based on partial data. Yes, it's better data than they've ever had before, but it still doesn't mean it's exactly right. So if they say you owe X, you probably don't owe anywhere near that. You just need to tackle it in the right way. So there we are. HMRC have upped the ante in 2025, no doubt about it. And in 2026, it's going to get even more intense. They're investing heavily in enforcement because it's been incredibly profitable for them. If you're a small business, if you're a side hustler, if you're a freelancer, a consultant, if you're doing anything that generates additional income from anywhere, you are at risk. if you're not following the rules, with things like making tax digital coming for sole traders, requiring you to report quarterly, it all starts to make sense, doesn't it? They want real-time visibility into what you're earning. I'll cover an empty video soon, but you don't have to be a victim in all of this. You don't have to be an easy target. Get compliant, get pretty much perfect records, understand the risks, get professional help if you need it, and don't panic when that letter arrives. If you do need help, or if you're worried about an investigation, or if you've already got a letter, links in the description for a free consultation. We'll look at your situation and we'll tell you honestly if you need our help or if you can crack on with it yourself. Because none of this is going away, it's going to become the new normal. So understanding and how to ultimately live within these confines, if you're going to live in the UK, you need to make sure that you're playing the game as optimally as you can within the rules. Now, I hope this video has helped you understand what's coming. Hit the subscribe button if you haven't already. We're going to be covering every development in 2026 as things do get rolled out. Drop your comments. Are you worried about HMRC coming after you specifically? Have you had a letter already? Remember, it's good to talk about these things.